Hi, folks. Dan here from the Vision Business Community. And joining us today, we have Jake Berger of Pitcher Partners. Jake, welcome. Thank you very much for joining us. Accounting and strategy is the new sexy of today, isn't it? The accountants are all of a sudden sexy again.
Never
Also
been
for
in
the
such
time,
never been in such high demand. Never
That's
never
right.
had so many questions.
Absolutely. Everyone is rushing towards their accountant instead of ignoring them for the best part of 3 months, and so it's great. But look, what we wanted to do was to have a chat with you today about the stimulus package. Now that's been announced. Now that's all really locked away. And I think there's a stack load of questions about what it means for people, especially in the SME landscape. But before we get into that, Jake, a little bit about yourself, a little bit about Pitcher Partners.
Yeah, perfect. And thanks for having me, Dan. So I guess I'll start with Pitcher Partners. So Pitcher Partners is a full-service firm, mid-tier firm, so specialises really in that SME market, small to medium enterprises. And that's, by definition, that's entities with a turnover of 2 mil to 250 mil. Now, obviously, we play around the edges of that. So we'll look at smaller businesses, we'll look at larger businesses. But really our focus is on kind of privately held businesses. So dealing with business owners and dealing with the actual business structure itself, and also high net wealth individuals. Now, my focus personally is on both compliance, so doing people's and companies and trusts tax returns, BASs, financial statements, all that kind of stuff, so the regulatory obligations, but also doing tax advisory. I do a lot of advisory work. And so that's, if there's an unusual transaction, if they're buying, selling, M&A, or alternatively, a lot of dispute work with either the tax office or the state revenue authorities.
Okay, great. So the stimulus package, how big is it? It's roughly 190 billion. Give us a quick overview.
Yeah, so I mean, this is something that I've never seen anything like it. It's unprecedented, and obviously, each year us accountants get very excited around budget night. But the things that have been announced within the last couple of weeks, eclipse any budget that I've ever seen, or any budget forever. But yeah, so essentially you've got a few kind of big ticket items that a lot of people have been asking us about. So probably the JobKeeper payment and the cash flow boost are really the two massive ones.
Mm-hmm. Can we dive into the job seeker payment? Because that's where I think there's been a lot of change. For me personally, the way that I interpreted what our employees and what us as directors were entitled to was very different 2 weeks ago to the way that I interpreted the new postings on the various government websites over the last couple of days. Give us, I guess, your insights into job seeker.
Yeah, so just quickly, it's JobKeeper, not job seeker. So the JobKeeper payment. Look, the interesting thing about it is, I mean, we're filming this on Thursday, the 10th, I think, and it only just passed yesterday in the Parliament. So there's still a lot that is unknown, or still there's a lot of interpretation, a lot of reading up on this. So I guess take everything that I say with a pinch of salt. But ultimately, what this stimulus package is all about is assisting businesses and assisting employers in paying employees. And the focus really is on keeping that link between the employer and the employee. And how that comes about is, even if there are employees that get stood down, that are no longer engaged with the business, it's forcing the engagement to continue by funneling the cash flow through the company, through the business, through the employer to the employee. Instead of, how governments would normally do it by doing it through, say, Centrelink or something like that, it's essentially pushing that all back to the employer and keeping that connection. And the aim of that is, once this is all finished, once this is all done and dusted and the economy is starting to kick back into life again, you just got that easy connection with that person, with that employee. So I'll talk you through basically the way it works. I suspect for most of everyone that's listening here, you're going to be an entity that has a turnover of less than $1 billion. If you're listening with more than $1 billion, well, give me a call separately and I can talk through that stuff. But yeah, essentially, you will need to show that you have had a decrease in revenue of 30% or more. Now we'll get to what that means, but if you've had a decrease of revenue of 30% or more, you will be eligible, and that means that you will be able to get the government to fund $1,500 per employee per fortnight their wages. So the government, what will actually happen is you will still pay the employee, and then early the next month, the government will refund or pay you back $1,500 per fortnight per employee. And this, as I mentioned, this can include employees that have been stood down, so that you're no longer working with, or where their pay conditions have changed. So it's a massive easing of expenses for businesses.
So if you are an operator of a business and a business entity, and you're the director of that entity, and you have employees, you're eligible for JobKeeper payments of $1,500 a fortnight. But as a working director, are you also eligible for that same $1,500?
Yeah, it's a really good question. So I've had a look through what's called the exposure draft, which is the kind of draft of the legislation. I haven't been able to get my hands yet on the legislation that actually passed, and I could not see anywhere where it gave payments to directors, or where directors were eligible to receive this payment. However, Treasury has released a fact sheet which says that yes, the intention is that each company will be eligible to pay this for one director and for one shareholder. And presumably that doesn't have to be the same person. So if you have, the director is different to the shareholders, you have multiple directors, multiple shareholders, you could potentially get this twice. It's not clear to me what that will mean if the shareholder is not a natural person. So for example, a lot of business structures might be a company where the shares are owned by a family trust. I don't know if a family trust would qualify as an eligible shareholder in this case. But yeah, we've just got to wait to see the legislation and see how it works.
A week ago, if you were a director, I think the pretty firm answer, was no, and trying to understand what they're eligible for now really has changed. As you've mentioned, if you are a director, what sort of requirements do you need in terms of making sure that your entity lodgements have been up to date? Do you have you had to lodge 2019 financial year tax return for the entity to be eligible?
Yeah, that's also a really, really good question. So I know that the cash flow boost, which we can go to in a bit more detail in a little bit, had that lodgement requirement, and I believe there's a similar lodgement requirement in the JobKeeper payment. Now, what that requirement is A, that you have to have lodged your 2019 tax return, or you had to have lodged a BAS from the period of 1 July 2018 till the date of 12th of March 2020. Okay, so that BAS requirement makes it quite a bit easier to get in, because obviously a lot of our clients may not have lodged their tax returns yet, or may not have lodged them by the 12th of March because, you might either have 30 March taxpayers or 15th of May taxpayers, which the majority of the SME world would be in that category. So yes, you can definitely get in there with a BAS. an interesting question is, well, what if you haven't lodged your BAS? So we have many clients that, they might be new businesses that have just started, they haven't got all their processes in order, they haven't been trading that much, so they may be late on lodging their BASs. Can they get in there? So the legislation says you have to have lodged all these things or one of these things by 12th of March or some other time as allowed by the Commissioner. Now, it's not clear what that means. So the explanatory memorandum, which is something that the Treasury issues with legislation, that it helps explain the legislation, says that's in place essentially to stop dormant companies getting access to this, but it shouldn't be to stop companies that are just late lodging. But there's an ATO fact sheet now that says we'll only give you that concession to lodge later if you already had a lodgement concession in place. So if you'd already called up the ATO before the 12th of March and said, I need to lodge a little bit later, and you had that deferral in place. Don't know how it's going to actually work in practice. That's one of the unknowns.
Yeah. So in terms of then, it seems like there are still a few unanswered questions around the JobKeeper and whether or not how directors manage payments to themselves, whether it's through, whether they pay themselves through PAYG, whether they take director fees or management fees, whether they take distributions, whether they, through their family trust. So there's definitely still some grey area around that topic by the sounds of it. But what about then for the cash flow boost? Are they eligible for both, or is that going to be double dipping as well?
Yeah, so the cash flow boost is probably a bit more known because the legislation has been out for I think about 2 weeks on that. So to some extent, it's still unknown because we haven't yet received any of the boosts, and people are only probably now just starting to lodge their BASs, which will make them eligible. But I'll just quickly talk through what the cash flow boost is, what it means, and then we can talk about directors and whether they're eligible. So the cash flow boost is essentially the ATO is going to refund you or give you credit for 100% of the pay-as-you-go withholding that you withhold from wages over whatever your lodgement period is. So in your monthly BASs or your quarterly BASs, depending on what type of withholding you are. So let's say you've got a withholding of $10,000 in a BAS. You send that off to the ATO. They're going to give you $10,000 back. Now, there's a couple of intricacies about that. So firstly, you've got a minimum amount of $20,000 and a maximum of $100,000. And that's split over 2 periods. So it's $10,000 minimum per period or $50,000 maximum per period.
And so if you've, can I just ask a quick question on that, Jake? Because I think a number of business owners may be in this position where, they have ceased trading for a period of time until sort of things return to normal. They may not have incurred any sort of GST debits, but they are holding, GST credits, or they may be, sort of in a GST credit debit neutral sort of place. If they effectively are then have access to $10,000 in effectively what are GST credits, how does that work from a sort of cash flow perspective? Are people having to lodge their returns, and those credits are simply included in the refund from the lodgement?
Yeah, it's a really good question. So I guess it's important to understand that it's different to the GST system, although you do lodge it at the same time. So when you lodge your BAS, you've got your GST boxes, and you've also got your pay-as-you-go boxes that relate to essentially wages. In terms of the cash flow and how that works, so again, the explanatory memorandum to this cash flow boost says that by default, the ATO is going to apply it against existing debts. So if you have a net GST payable amount, or you have pay-as-you-go income tax instalments, or even just the pay-as-you-go withholding amount that you report in order to get the boost, the ATO is going to apply it against that by default. So it's not actually going to be a cash flow boost. You're not going to necessarily get cash in the pocket. It may just be applied to reduce your liabilities. Now, the ATO, the legislation does say there are certain cases where the commissioner won't apply it that way, so won't apply it against existing liabilities. And that's in the case of where you've got an agreement to pay by instalments, or you've got some kind of payment deferral in place. What does that mean? I suspect if you want to receive that cash flow boost, it may be a good plan to lodge your BAS early, lodge your BAS straight away, and contact the ATO and get on a payment plan for the amount that's outstanding. And then hopefully you'll be able to get the credit, that refund paid in full. Now, I don't know yet whether that's going to be successful, but we're going to try it on a few of our clients in this week, I think.
I'll just touch on that because I think that's a fantastic piece of advice for, a lot of businesses. $10,000 as a minimum. For some, it could be as high as $50,000 twice, $100,000 maximum. So that's a lot of money for a lot of business owners, especially during this time. So just to summarize that tip, I guess, that you've given, and take it with a grain of salt, as you said earlier, but there's a very real chance that if people lodge on time and deliberately lodge on time or early, and strategically arrange a payment plan with the ATO, they're then in a better position because effectively the PAYG liabilities and the GST debits are managed over a period of time. Then there is a real chance of then actually receiving, that sort of cash flow boost, $10,000 to $50,000 twice, actually in your account, and use that for money to operate your business. Okay, so that's a great tip.
Yeah, no, that's exactly right. And just another important thing to understand about this cash flow boost, especially for monthly withholders. So a monthly withholder is generally anyone that withholds more than $25,000 per year. So not that hard to be in that category. You only need a couple of staff. So if you're a monthly withholder, you're going to receive 3 times what the withholding amount is in your March BAS. And then from then on, it's going to be just 100% of what you put in the April, May and June BASs up until that $50,000 amount. So once you've got into $50,000, you're not going to get anything more. What that means, 3 times this BAS, you're going to get a huge cash flow boost for this month. So definitely get it in early. The other reason to get it in early is they're only going to pay you if you've lodged your BAS. So it's the later of the 28th of April or thereabouts, or when you've lodged your BAS. So most people that lodge through a tax agent will have an extra 28 days to lodge. They can lodge normally until, I think it's 25th of May. If you only lodge then, they're still going to have to process it. You're not going to get the cash until at least 25th of May, if not later. So this is definitely the time when you want to be lodging earlier rather than later.
Yeah. Okay. So as a director, are you also then, you've found a way to be eligible for and take advantage of the cash flow boost? You've got your employees on JobKeeper. Are you eligible for the cash flow boost and JobKeeper as a director?
Yeah, it's a really good question, and one that a lot of people have been asking us. So on the face of it, no, you're not eligible for the cash flow boost unless you are making payments to the director, which would ordinarily, if you make payments to a director, you should be withholding, pay-as-you-go withholding, which would get you into the system. Now, I guess the concern would be there's an integrity provision within the cash flow boost that says that a entity cannot enter into a scheme for the sole or dominant purpose of either A, accessing the cash flow boost, or B, increasing the amount that they receive from the cash flow boost. Now, I think
I've just
there's
got
a
a really
few.
quick question on that, Jake, because I'm a little bit,
Yeah.
I'm just a little bit confused there. So, if did you mention before that a director is not eligible for the job seeker, or for the job keeper rather, or for the cash flow boost if they are not taking payments?
Yeah, so a director would be eligible to job keeper. So that was the one where I mentioned that, as far as I can see in the legislation, I haven't seen yet where that is allowed, but the Treasury has in a fact sheet has said, yes, one director and one shareholder will be eligible. So that means a company that has a director and a probably an individual shareholder should be able to get $3,000 per fortnight,
So
assuming the revenue has dropped and all that kind of stuff.
So let's assume that, if we assume that they're eligible for the JobKeeper payments, or one director is, did you mention before that they are then not eligible to apply for the cash flow boost?
So the two are not linked. So it's not,
Okay.
it's not if you're eligible for one, you're not eligible for the other. The challenge to the cash flow boost is, so a lot of our clients that are, the sole director of a company, sole shareholder, or their family trust as a shareholder, they will often just kind of take cash out of the company and manage it at year end by way of paying a dividend or putting it on a Division 7A loan, as opposed to taking it out as wages and paying pay-as-you-go withholding on that amount. The challenge that those kind of people are going to, or those kind of companies and directors are going to have, is if you suddenly register for pay-as-you-go withholding and say, no, now this time, even though all these other times in the past, it's just been a loan or it's just been a dividend, this time it is actually director fees and I have a pay-as-you-go withholding obligation. The ATO could look at that and say, I think you're doing this for the sole or dominant purpose of receiving this cash flow boost. The issues with that is, A, they can disallow it, which means they can claw it back, because probably they're going to pay it automatically, because it seems like the way it works is if you lodge your BAS with an amount reported in as pay-as-you-go withholding, they're just going to pay it, assuming that you're in these other eligibility criteria, which is you've got turnover of less than 50 mil. They may then, after the fact though, say, I don't think you are actually eligible. I think you've just done this to get in there. You got to pay it back to me. You got to pay it back with interest. Or another thing that they could do is say, you know what, if you're going to treat this amount as wages, I think all the payments that you made over the past 5 years of operations, why weren't those wages? And then they can come after you for super, they can come after you for pay-as-you-go withholding, they can come after you for payroll tax. So there's definitely a lot of risk to suddenly making director payments. Now, that's not to say that you can't do it. So, I've got one client, for example, who we had emails back and forwards around December, January, saying, I think it's time for you to go on pay-as-you-go withholding. The company's literally only been around for about a year or so. So they were just getting their systems and structures and procedures in place. In a situation like that, I don't think it would be unreasonable to put them on pay-as-you-go withholding. Like, we have evidence that we were going to be doing it anyway. And so I don't think, because of this cash flow boost now, we should stop doing it for the next 6 months, so that there's not that image. But it may be one of these things where you engage with the ATO and just say, hey, we're about to do this. We've got evidence, we were thinking about it before. Is this okay with you guys? Do you have any problems with this?
Yeah, okay. So that all makes a lot of sense. I feel actually myself personally a little bit more clear on, because even the thing that stood out for me was I was really not too clear if the JobKeeper component of the stimulus package and the cash flow boost were really connected. So it's good to know that there's a possibility that, business owners can be entitled to both. Obviously, watch this space as things sort of unfold a little bit further, but that definitely clears things up. The other thing, the key takeaway point for me is there was a really big range between the eligibility requirements for the JobKeeper. You know, yes, you have had to lodge your 2019 financial statement or just a BAS from the 2019 financial year,
Yes.
really. And that's a big difference for a lot of people. So if you haven't lodged your 2019 financial statement, it doesn't necessarily mean that you're not eligible. So that I think is really, really interesting as well, and a fantastic point. The other key point is think about your March BAS. If you want to have the cash flow boost actually be treated as cash that you can be tangible cash in your pocket that you can use to invest in your business, or pay your keep your business afloat, pay your overheads. Lodge your BAS, and I think a lot of people are thinking, I might just put that off at the moment. Get your March BAS lodged, enter into a payment agreement, and then there's probably a very good chance that you can take advantage of that cash flow boost as tangible money in your pocket. They're my three takeaway points. Jay, is there anything else in terms of the cash flow boost that you think is relevant or you think we've missed?
Yeah, just probably a couple more things. First thing is just to know that cash flow boost is not going to be subject to tax, which is good to know, that you don't have to put away 30% of it, save it up for when the tax man comes. So that amount's going to come in. You assume you're a company, you don't have to pay a cent of tax on it. Important for a company, eventually, if that got paid out to shareholders, they would have to pay tax on that. But, for most businesses that might be struggling, that is down the track. That's not something to worry about. If you're getting the cash flow boost as a sole trader, so for example, if you employ people as a sole trader, so you're not going to get it as a sole trader if you're just using your own time. But if you're employing people, you will be able to access it. Or if you're a discretionary trust or a partnership, that's just going to flow through to the individuals and they're not going to pay tax on it. So that is just a permanent, you're going to get anywhere between $20,000 to $100,000 tax-free. One other important thing to understand about the cash flow boost is it is done on a per employer basis. So if you have multiple business entities in your structure, multiple companies that all employ staff, each of those entities is going to be able to get it. So we have some clients that might have, 4 or 5 different retail shops, for example, that are still employing people. And each of those acts as an employer in its own capacity. That could, if you have 4, for example, you can potentially get up to $400,000 from the government. They don't group it together. So it's potentially incredibly valuable, this one.
That is huge, actually, because, that is meaning that even if your entities are relatively small, the minimum was increased from 2,000 to 10,000, I think, in the last week or two.
Yeah, so it's 20, so it's $10,000 per cash flow boost, because there's 2 boosts.
Yeah.
So 20 in total.
So it was increased to $20,000, however you want to dice it, cut in half, $10,000 each time, each cash flow boost per company. So if you had 5 companies, each with 1 employee,
yes,
you're effectively then entitled to $100,000.
5 times that. Yes, a minimum of $100,000. And just a couple of interesting things about that.
Just really quickly, Jack. Even if that employee earned $1,000 as a one-off,
yes,
that's incredible, isn't it?
So all that there has to be is that the entity makes a payment. So payment of wages, something like that. Which I'll get back to that actually in a second. That's an important thing for directors. It has to have made a payment, and it has to be a payment on which it would ordinarily have to withhold an amount. So it doesn't actually have to withhold an amount. It just has to be a payment on which it would have to withhold an amount. So if you have someone that is, under the tax-free threshold, an employee, and that's the only employee it has, or if, even if you have someone that's just over and you literally withhold $1
Mm.
you are going to get that minimum amount of $10,000 and you're going to get it twice. So two things to understand from that. The second cash flow boost, which is going to get paid in June to September, is just solely based on what you got in the first cash flow boost. So you could, just for the sake of the argument, you could, for example, get to your $50,000 in the first cash flow boost, which is March through to June. Then you could fire every single employee and have no pay-as-you-go withholding. I'm not suggesting that you do that, but you could. You would still get $50,000 for the second cash flow boost. It has no relation to what you withhold during that June to September period. It is solely linked to what you get for the first cash flow boost. Now, the one other thing that I wanted to say about the director, so we were talking before about whether directors would be eligible to receive it. So there does have to be a payment that was made. So I guess the interesting thing is, does that count if you're crediting it to a loan or something like that? Not sure. Ideally,
sorry, are we talking about JobKeeper now or the cash flow boost?
Sorry, still for the cash flow boost. Still for the cash flow boost. It needs to have been a payment that was made. So, I guess there's always going to be a bit of uncertainty if the director is simply pulling out money, every now and then in order to pay personal expenses, as opposed to having a set, $5,000 per month or something like that of a wage or director fee that it receives. Just a bit of, I guess, ambiguity about that, or a bit of a grey area.
Okay, yeah, it definitely sounds like there are a couple of, I must say, it's looking a hell of a lot more positive than it was, a week to 2 weeks ago. That's for sure.
Yeah, look, I think, it is. Look, as we said at the top, the total packages, all of this is coming to about $200 billion. These are enormous. The amount of money that is going to be flowing out as a result of this is unprecedented. But they are, fairly complex, and there are potentially some traps or mistakes that can be made, or there is certain risk areas, ways that you can get access to this, where you really have to think, am I supposed to get access to this? Am I doing something just to get access to this? And if that's the case, just be careful.
Okay. Jake, how can people, look, thanks very much for your time today. How can people get in touch with you? Are you happy to answer any sort of high-level questions? Are you happy for us to share your details?
Yeah. Look, definitely share my details. More than happy to get emails or take a call. And if it's something quick, I'll just answer it. And if it's something that requires more time, we'll go from there and discuss what we do.
Okay, I'll definitely post your emails, your contact details below. To everybody watching, thanks very much for joining us. That's Jake Berger of Pitcher Partners. Jake, you've the sexy's come back to accounting, and you've brought the sexy to accounting as well, I must say. So thank you very much for your time.
Right, thanks, Dan. Thanks for having me, mate.
Thanks, guys. Thanks very much for watching, and stay tuned for more videos. Bye. Good one, mate. I think that was a lot more relevant for people.
Yeah, I think we did a far more deep dive into the packages, and went through it in quite a bit more detail. So I think that was good. Yeah. I hope it didn't bamboozle people at any time, but we'll see.
No, I think I struggled. I think the points were just a little bit more clear as well. And I think probably looking back, I wasn't jumping in and asking questions when I think the audience would have wanted to.
Might be, yeah.
And I think I probably just, for the average layperson, I think that probably, I think that's going to be a lot more clear for sure. Yeah.
Yeah.
Mate, thanks so much for doing this again. Really, really appreciate it. Go and enjoy your long weekend.
Will do, mate. You doing anything? You up to anything, or just taking it easy?
No, not at all. We just started potty training today with our toddler, which is is exciting. So
Yeah.
she's been walking around bareback all morning, and no, it hasn't gone too well. We didn't have the first interaction with the potty, a very positive one, unfortunately. So,
So we're encouraging our 2.5-year-old to do this as well, and he has shown zero interest in engaging with it. And like, I know that he can, because, you know, we'll take the nappy off and he'll be like, I need to do a wee, you got to put my nappy on.
Yes.
And I'm like, no, just come and go in front of the potty and you can do it there. He's like, no, I will not do that. I refuse to do that. I will only do it in a nappy. So he can fully like hold it in and control it. There is no problem with that. He just refuses to go to the bathroom.
To go to the bathroom. We've got a few. Nicole's put a few post-its, record sheets around. I think the idea is encourage them with sticky stars and things. And
I think we should do that as well.
But no, look, all that's happened today is really we've just cleaned up a couple of wees, and we'll work out the rest. But that was part of the whole deal. You know, Nicole was like, I think we should start. If she goes, like a week ago, she goes, if I get laid off, we're going to start potty training.
Yeah.
So hey, you know, give it a good go, I guess.
Hopefully you don't have too many carpets.
No, they're all rugs, actually.
Yeah. Okay.
So,
yeah.
How about you? What do you guys got on?
Nothing, mate. Nothing.
Yeah.
I think we might try to take the kids out to a park. Eva wants to do a bushwalk, so we'll go find a park with some trees and do a little bushwalk. But that's it. Nice. Assuming I don't think it's raining anymore. I think it's cleared up. Don't know.
Yeah, it's pretty much cleared up here. Yeah. All right, mate. Thank you again, sincerely. Really happy we did that again. And this will be the first one that goes up on Tuesday.
Yeah, okay, perfect. Just thinking, actually, probably the only other thing that we can do, if there are quite a few other questions or anything like that, I mean, we can always do another one if need be.
Yeah, probably. Look, I think probably what we'll try to then do is do like once we've built the group up a little bit. Like it'll take a week or two, but once we've built the group up a little bit, we'll probably start doing a couple of live Q&As. Where anyone can just and that can just then live then sort of ranks really well and sort of stays in people's feeds for a lot longer. So but no, that's a really good idea. I think there'll definitely be a need for a follow up for sure, because things will change again, and people will be in new situations again, and so that'd be really great. But what I'll do is I'll send you this through with I'll cut it up into little teasers as well, and sort of just little things that if you want you can promo around the place. But I'll flick that over to you. I'll hopefully finish this. I'll definitely finish this over the weekend and get it off to you before Tuesday.
Awesome. Thanks, mate.
Lovely. All right, mate. Cheers. Have a good one.
See ya.
Bye.